What's up, everybody? Welcome back into a daily recap on, as usual, our three pairs: gold, Bitcoin, and EuroDollar. Today was a public holiday, Labor Day in USA and Canada, so we didn't trade it because we were expecting, since we, as you can see, we trade pairs against the dollar, we were not expecting a lot of volume. Let's move and start with gold. Our analysis of the day, starting from here, we were expecting, after the aggressive bullish moves from the previous day and last week, NFP, you know, everybody knows that this move was caused by a really bad NFP. We were expecting a pullback either to a sort of creating a flat candle support in the middle of this range. Okay, here, or even before below at key level 1820 or PSA 1821-ish, as you can see from my arrows. Being a very low volume, this was the movement that happened all day, and we are starting now to get some rejection now that is almost market close. Some rejection here. I think it's already closed. Yes, it's not moving anymore. But let's see. Let's start. As you can see, okay, it closed earlier today because it closed at 7. Not much movement. We started in the morning during Asian session. Always, especially on Monday, brings some volume volatility, reacting a little bit above the key level 1828 and rejecting. We see smaller and smaller candles against a strong resistance / key level. We can identify a wedge being created. We can say here, wherever we can see, and we expect either price to break and retest, especially above these previous highs, or we can expect price to get squeezed on the downside. And this is what happened. We're talking about 30 pips, so all caused by this low volume day. But as you can see, we had entry with safer entries to break and retest below the previous price sensitivity area, and we see that the reaction is basically at these previous lows as well. Continue ranging. We have some another reaction at these same lows, more or less. Pullback, double bottom at these exact same lows. Continuation up, rejection from the key level, and then we see an attempt, impulsive attempt to break above. But now we're not just, at this point, we're not just looking at, yes, 1828 caused some reaction, yes, but you can't forget about these previous highs on the left-hand side. That's why you should always have charted these previous highs, yes, the historical key levels, but as well recent price action. So then we can identify the main trend of today with a break, retest, giving you high risk, high reward entries. On the sell side, here you see a reaction at these previous lows, a pullback, short pullback. So you see you travel below, you can have some rejection, no real clear movement because we are reacting at these previous lows, as you can see here. Okay. we start ranging, we create another block between the two highs and lows. Here we have a fake out below. We have our typical FU candle reacting and retesting these previous highs. This is giving you, this was a high risk high reward entry, which your entry still live, not even back to break even. This is medium risk entry, break and retest. FU candle, very good. There you go. You have your very aggressive, impulsive action, retest of these lows, as you can see. Okay. Giving you many opportunities to re-enter on the safe side of the bearish trend, as you can see. Safe entry. And then price making new lower highs, lower lows. You can see here, you might, if you just trade based on trend lines, you think, okay, now we have a switch in market structure. We have a switch in market structure, but remember that market structure is made of lower high, lower low, lower high, lower low, lower high, lower low. Where is it reacting here? Is it a new higher high? No. Can it be a new lower high? Yes. Here. Is it a new higher high? No. So as you can see, we're still below this previous price point, the last higher, lower high, sorry, giving you the opportunity for another re-entry or to leave your position open. You have some reaction on these previous lows. But still, indeed, confirmation of bearish trend. You see, failure to break above. Just falling short. Continuation down. Reaction again to these previous lows. Or the block being created. And then we have a spike down. We are very, very, very in a very big range. Let me do it in yellow because it doesn't make sense for it to be red after this last high, last low being created. Yes, then you have a double bottom reaction at the previous highs. Yes, you have a bearish trend, but it's not anything particularly clear. So you can see many reaction in this low, this is broken, reaction and this previous fake out PSA, and then another reaction, double bottom being created at these lows. Okay, now we are making new higher high, and we can just give some green to this chart, pathetic chart today. Okay. What I wanted to chart is as you can see, yes, now we broke the trend line, we tested the trend line, but most importantly, we broke twice these previous highs. We are indeed creating and printing higher low, higher high, higher high, higher low. Of course, this higher low is validated only after we create a new higher high, but you get my point. Okay, we're going now to do our analysis on Bitcoin, starting from the daily time frame on the intraday analysis on the hourly time frame. We were looking at some as well, very similar to gold, some pullback against very important, as I was showing, very important price sensitivity area, 52,500, 53,000. Of course, it didn't reach 52,500, but at these previous PSA and PPRs got some very nasty rejection. And then after the pullback, we wanted to see some reaction because we are still in a bullish bias until we break below these previous lows. We are still in a bullish bias, unless market structure tells us otherwise. So let's go on 1 minute. As you can see, some more volume than the other pairs, but as you can see, we have nice reactions at this PPL, rejection PPL, reaction bounce off, slightly dipping below, break, retest, continuation up. As you can see, failing to break the PPL and giving you a nice bullish spike up. There you go. We have some reaction again at the PPL, and then we have very impulsive and aggressive move on the upside probably to grab some liquidity, because then you see very strong rejection. You never see a consolidation. What you want to see for price to continue up is actually aggressive retest, failing to break, or either a period of consolidation and then a continuation up, or our usual break, retest, some sort of exhaustion from the sellers, and then impulsive movement up. But what you see, the very next two candles are just a meltdown, indicating that this was a liquidity grab. If you don't catch the high risk high reward because it's too impulsive, you have the retest of the PPL, continuation down, rejection again of the following PPL, retest on the dot, failing to break, as you can see, fails to break the PPL, giving you a safer entry, continuation down, sort of break of the retest of the PPL. But if you don't miss here, you miss it here, you see there's a clear break and retest, giving you also a stop loss to put above here for price to then continue down and react exactly on the dot to the next PPL 51K key level. From there, you see break, retest, or PPL to PPL, again reacting at these previous highs, PPL to PPL, 25 pips each. Then so this is very important. Look here. Even if it's not respected on the dot, you always see break. Look here. Okay, put it here. Look how clean the price action is. You have a very impulsive, bullish candle, you are at a PPL. Let's put it this way. You are at PPL. Okay, very aggressive bullish. Then you have 1, 2 bearish candle failing to close below the PPL. Then you have a small bullish giving you the sign of exhaustion that I was telling you about, and then you have a much better bullish. This is your higher risk reward entry, and you have a much safer entry above, because these candles are creating a flat candle support, flat bodies above these previous highs, as you can see. So all this is, even if it's not clean wave retest on the dot, if it's already off the PPL, you have many opportunities to enter. But now let's see if I can manage to fix okay, just give me a second. All right, I fixed it. Now it should be good to go. So consolidation period, again, reaction on the PPL, fake out on the upside, immediate rejection, giving you, as I was telling you, this is a very high risk reward. And safer entry. Then you have a period of consolidation. Then you have here break and retest, B and R, 50 pips clean, PPL to PPL. Then you see some ranging against the PPL, trying to break above, getting rejected. These are all in a 25 pips range. Then you have a squeeze, and again failure to break above this price sensitivity area that was held all day long. And again a reaction at PPL. Okay, and this is it for Bitcoin. Not much. I'm going to give you a medium risk entry again after 50 pips move. This is it for Bitcoin. Just give me a second and I will be with EuroDollar. There we go on EuroDollar, starting as well from the hourly time frame this morning. We were expecting either a bounce, creating a sort of double bottom at this PSA in continuation bullish, because as well euro is on a high time frame bullish as is gold and against the dollar, or either having a pullback to these previous highs and then continuation up until to the left to level up for at least these 13 pips. What we see on the, this is very also from yesterday, because the move today were very low. I mean yesterday, yeah, you got me. We have a break below this PSA, sort of consolidation on the block being created below, still bullish pressure, break above and retest and failure to break below above those previous highs. and then having the break and retest at the PSA that we charted this morning, around here, break and retest. No, exactly, I'm talking about this. Okay, so this is not today, it was during Asian session, but giving you break and retest, not by my analysis, but giving you possible entry. Where did price react here? Look on the left, draw a line, and you will find it. Again, slowly, because there's not much volume during Asian, and there will be no volume during as well London and New York because of the holiday. But what you can see is price makes a new low, slightly below the PSA. We're coming towards the start of the day and the analysis, because we are here above the key level. We want either to see this one after the consolidation or break and retest, and then a deeper pullback in continuation bullish as per high time frame trend, as per these arrows, red one and then a green one. What you see is a break and retest, very short-lived, but indeed bullish. Break and retest again, and then going to, I already know, if I look on the left, I know that there's a reason why it stopped here. Look, the magic. Okay, as you can see, exactly at this previous price sensitivity area that caused this reaction during Asian session. From here you see failure to break 3 times, break, retest, break, retest, order block being created below, last kiss of this price sensitivity area, and continuation down to then revisit the following PSA here. And exactly here gives you some choppy but still bullish moves to go after creating again PSA order block slightly below the PSA, failure to break highs, failure to break lows, retest, rejection. Again, look how small the volume, how low the volume was today, but indeed it went PPL, PSA to PSA, rejection, again, reaction at this previous exact close, and then continuation up, and then just ranging at these highs. As you can see, nothing happening, not much, moves of a few pips. As you can see, this PSA is 13 pips, and if of course gave here high risk reward entry, failure to break, and safer as per analysis of the PSA. No clear entry on bullish side, I'm gonna say. There was no retest, no clean retest, maybe here, but nothing very clear. So this is it, guys, even for today.
we're going to be back tomorrow after a nice regular with a regular volume day. See you tomorrow, guys.